All right, so here we are on April 20th, Monday. So we got four stocks on the premium, super premium list today. So should be pretty awesome. Hopefully today will be a much better day than Friday was, and hopefully we can regrow this account between that sim trade mess up and platform fees. We've come down quite a bit in this account from grew it up to 1,800. Now we're down to 12. So we definitely have some growing to do. So hopefully today will give us plenty of opportunities with the four super premiums that are on the list, if they even hit today. But if they do, it should be pretty awesome. All right, so here we are in this stock. I looked over and this had just broken and switched, and didn't realize it hadn't confirmed yet. And I thought I was missing the boat, so I hurried up and entered my order and didn't even realize it didn't confirm. So now it's pulling back like it probably would be. So we're in this trade even though we shouldn't be. So I just put my stop in below here. So if it does break this, then I'm out. But yeah, so we got a little bit early, and we might have to pay for that one. So we'll see what happens. All right, so we should be getting out of this right now. It's 11:07. I put my stop at 11:07, a break below here. So which means if that happens, we get tripped out. We'll start the day down $70 on an accidental trade. That's what I always tell my students. It's part of your risk management plan. You have to factor in mistakes because you're going to make them. Definitely going to make them, so you got to factor in mistakes. All right, so I didn't get the recording going, but we're out. So $84. We start the day down because of an accidental trade. That's disaster. All right, we'll look for another trade. Okay, if this can hold this in 10 seconds, we'll be in. Oh. Oops. All right, so we're in. We're jumped in a little bit late on this one. So accidentally traded the other one and got in late on this one. So today is already starting out to be awesome. All right, we're going to put our stop in, and hopefully this can make us some money back. 131.40. So, all right, we'll mark this up and be back. All right, so you can see I got in way late on this trade. I fumbled my order entry over here because if you are working with this Dash Trader order platform, you have to click on it if you're going to use hotkeys. I was on my Thinkorswim chart, not on this. So when I tried to use the hotkeys, I was actually trying to hotkey into Thinkorswim. So I had some issues over there. That I had to fix that and make sure we're good, and then get back in over here. And then as I was pushing the button, the stock boosted and we got in late. So yep, it's just one of those days already. Can't believe it. So hopefully this turns around for us. We'll see what happens. All right, so here we are on this this stock that we jumped into late. So our risk reward ratio is off, and yeah, we're gonna take a beating in this. This could be a really rough couple weeks here for April. No big deal. We can dig our way out of this hole, but it's just that's always a bummer to start down in a hole. All right, we'll see what happens. All right, so we're getting close to our stop. All right, so we're coming back a little bit here. So here's a question for you traders. So if you have you get into a stock and it's not like your best quality setup, but it's pretty good setup, or maybe it's a name that you trade all the time, but it's not your best performer. It's all right. It's better than not having anything to do. Usually has a pretty good win rate, like 70% or something like that, maybe 80%. But then you have one of your other stocks setting up that's got 90% win rate, or you're like your perfect quality setups, like the best setup ever, is starting to present itself. Do you jump out of the stock you're in right now with a small loss or a small profit to get into the better stock or the better setup? Or because you're already in this, do you just let it ride? Like what do you do? What do you do when you're in that situation? All right, so now you're in this position, and you have that other stock that's setting up. That's like just a perfect setup. Do you just dump this one and take your small loss, or do you hang out and potentially get a bigger loss, even though it's not at your stop target yet? Stops down here. What do you do when you're in that spot? All right, so let's look at this day. Oh man, what a day. Down $171 so far. Say so far, the day is not over. So today I had to do, I'm working on some other business stuff, and I had a conference today actually that I was hosting where I had to display information and moderate and all this other stuff. And I was using my trading setup with one of my monitors to try to manage that conference and display everything and all that. At the same time, I was trying to trade. So probably a bad idea, but I was like, I can do it. So sure enough, the first trade out was this one here, which I caught out of the corner of my eye. I thought it was switching and giving me permission to trade this to the long side, when it actually didn't, and it didn't give me permission, and it wasn't switching. It was just kind of like moving around, and I didn't even notice it. I just saw it at the corner of my eye, like, oh, I think, and I just went over and hit the hotkeys and jumped into this trade, and then realized that I shouldn't be in this trade, as you heard. The question is, what do you do in that point? Do I get back out and just take I'm down like $10, so what? Just jump out. I'm not supposed to be in the trade anyway, right? That's probably the right thing to do. At the same time, I'm trying to like get launched into this presentation and conference so that I'm not late and all my stuff's together. So I'm like literally like one hand's doing one thing, another hand's doing another. So I decided to just stay in this trade, which actually was the right thing to do. I mean, but I'll show you where I went wrong, and maybe this will help you out in your trading. All right, so here's where we were yesterday. So we ended up, opening somewhat flat, but I mean the stock really started to rally in the morning and was looking pretty strong. So volume is coming in, like just on a technical side, things were looking pretty strong with this stock. So I was like, you know what? I think I'm going to stay. This stock looks like it might have an update today. But I put my stop right here at the bottom of these candles. And the reason why I did that was because I didn't want to lose more than that much money. I didn't want to lose more than like 70 or 80 bucks. So I put my stop there. But you never put your stop because you don't want to lose a dollar amount. If you don't want to lose a certain dollar amount, then you don't have a certain amount of shares, right? So like if you're risking a dollar per move and you don't want to lose more than $100, then you don't buy more than 100 shares. So, but I just put my stop here. I'm like, I don't want to lose that much money. Whereas the right place for my stop would have been low a day if I was going to stay in this trade. But that was risking too much money. I wasn't willing to give away that much money. So I didn't do that. Where what I should have did if I was going to even stay in this trade was put my stop in the correct place, reduce my share size to the appropriate share size for the loss. So my risk management would be proper, and then I could ride this out and I would have been making money today instead of taking a loss on it. But I was more concerned with money than winning. And because I was more concerned with money than winning, I made choices based on money, and usually when I do that, I lose money. So anytime I'm more concerned with money, I end up giving away money. When I'm more concerned with winning, I usually end up winning. So, and I wasn't focused today too. So that's another thing. I mean, trading, as simple as it is with my strategy, it still takes a little bit of focus. You still have to make the right decisions, especially if you make a mistake. So as one of the things I teach my students is that, in trading, when you're doing a risk management plan, you're going to make mistakes. So you have to factor in that into your risk management plan. So, and when mistakes happen, you got to be focused and make good decisions, which I didn't do. So had I done that, this would have been a winning trade. So I'm going to go talk about my next disaster here while we're waiting for something else to set up. Okay, so then with the other trade that I got into, which was a good trade, my algorithm told me to get in, got permission, volume agrees, all good. Give me 1 second. All right, I had to close that door. I was about to get a little bit loud over there. So everything was good. Got in this trade, all good. And then while I was in here, I posed a question of should I stay or should I go because I had another trade setting up. Well, I'm doing all this at the same time as I'm trying to manage my conference that I have going on. So that was probably not a great idea. But normally what I do when I do that is I'll set a range order, not just a stop, right? I'll come over here, stop, type of stop, range order. Okay. Range order, and then I can set in my high and my low. That's normally what I do. Set it and forget it, then I don't have to worry about it. So my stop, my target was going to be 135.28. 135.47 is what it hit, and the spread would have supported it at the time. So I could have got out here with profit, no problem. But I just put a stop order only and then got sidetracked and was doing my other stuff and didn't even pay attention to this. Didn't even pay attention, and then came to find out that I had gotten stopped out. So stopped out for a loss when this should have been a win, or this was a green trade. So if I didn't jump into that one trade by accident, and if I would have put my range order in or even paid attention, I would have a green day right now so far. But I posed the question, should I stay or should I go? So let's look at that. So this was the other trade that I was looking at, and this stock has just been killing it for me. So it's been awesome. And sure enough, bam, I would have got my winner really fast in this trade. But you know, should you stay or should you go when you have a trade? So for me, if a trade says get in, everything says get in, I get in, and something else better looks like it's setting up, I just stay where I'm at because I got in, it said it was good. And then I'm just, that's it. I'm committed to that one, and I'm in that one. Even though the better quality setup is looking like it's setting up, it just doesn't guarantee that it's going to be a winner, So with my luck, basically, I would get out of that trade that I was in, and it would be a winner, an awesome winner. I would jump into the other one, which would end up being a loser, even though it was a great setup. That's just kind of how it works for me. So if it doesn't work like that for you, and then you're always lucky, then maybe maybe you do something different. But for me, I just choose to stay and in the trade. But curious to think about what your thoughts are. If you did have a better quality setup, is it worth staying or leaving to go get the better quality setup? What's your experience with that? All right, so day's not over yet, so we got a few hours left. Actually, no, we got like an hour left. So I'll keep an eye out. I have a couple other trades that potentially might be setting up that could rescue this day and turn it into a green day before the day's over. It's unfortunate this account just totally got beat up this last couple weeks here in April between, like I said the other day when I was talking in my other video about making a huge mistake thinking that I was in my sim and I was in my real account playing with hotkeys and whatnot, and just totally destroyed that account with that sim trade day, which wasn't actually a sim trade. And then Friday I had a losing day, which was a good losing day. Traded, everything was great, followed the rules. That's how it is. We're gonna have losers. And then today, just this huge loss of $171 when it should actually be a green day. So this account went from like $1,800, $900 to $1,800 and change, all the way back down to what will be if I have no more trades today. Somewhere around $1,100, not even $1,000. So almost back to square one. But I also haven't traded this account very much at all. Like I've barely traded this account. There's so many trades this month. This easily could be a $4,000 or $5,000 account just in the last few weeks had I traded every day, but I haven't been able to. So that's how it is. So hopefully the next couple of weeks we can grow back out of this hole and get this thing rolling. All right, so here's one of the hard parts about trading. So this is another stock. Actually own this one. This is a TVIX. So I own this already in my other account, and it's doing really, really, really good for me right now. Actually, it has been for a little while. So, but now I'm looking at my small account that I'm growing, and I'm like, oh man, look at this thing. Low of day at 225. It's already at 247. I think it's gonna rally, hit 253. I could jump, I could chase this stock right now, looking at the technicals of it, and probably recover my whole day and put an extra 300 or 400 bucks in my pocket. Keyword, I'll be chasing it. And the only reason I'm doing it is because I'm trying to recover my day. So it's hard sometimes as a trader to control yourself and say, I'm not going to chase, I'm not going to give in to FOMO. You know, I'm going to stay on the bench. I'm going to wait my turn to play the game. And when it's my turn, I'm going to go and play. I'm going to play good. But it's really hard to do that sometimes. Like right now, it'd be so easy just to jump in right now. And then what happens is when I don't jump in and this thing goes to like 300 before the end of the day, I'm going to be like, see, I should have did it. And then that's going to condition you to the next time, you know, maybe you follow the rules again and it you know, and you're going to look back and I should have did that again. I should have did it again. And then you're like, all right, I'm going to do it. And then you completely blow up your account. So, or if I did it right now, I would probably go down another couple $100 today. And then it's going to be so hard to recover this account. It's already going to be hard with $1,000 in there to trade because commissions are going to be expensive when you're only making like 40 or 50 bucks a trade until I can grow it back up again. So if I jump in this trade just because I want money and I don't want to have a losing day, I don't want a red day, I'm going to jump in this trade. And if I do that and have a huge losing day, then that's going to put me down below in the red on this account. And then it's going to be really hard to grow back. So I need to stick to my trading plan. Plan your trade, trade your plans. Always plan your trades and trade your plan for sure. You know, and that plan has to include risk management and everything else needs to be, you know, in that plan. So, you know, with this small account, this is not part of the plan. And I've already missed out on the move on this and this account. I'm getting ready to sell my position in my other account. So I definitely don't want to add to it now. But the temptation is there because I just want to be able to make a green day. And that's how I think a lot of traders, you know, can snowball the wrong direction. You know, a lot of small wins snowballs into a big account. But a bad day that lets you revenge trade and just, you know, you're going after money rather than winning can turn into a snowball that quickly deteriorates your account. And then all of a sudden you're like, oh no, I don't have the buying power. I'm never going to make it back. And then you start to get depressed and defeatist and then all your decisions from then on just get worse and worse, and then it's over for you. So, you know, just got to stay focused and say, yeah, I made mistakes today. Big red day. It's going to be a little bit of a difficult climb to get out of this, but the strategy is solid. You know, the system is solid. The algorithm's solid. My trading plan is solid when I follow it. All I got to do is just get back on that horse and keep going straight. So, and then we'll be back. So it's just something to think about. You know, try not to let your emotions get to you when you have, you know, disaster days. It's really easy to say, I just want to get that money back. I don't want a red day, but you know, you got to plan it. You know, if you don't want the red day, then plan it. Plan it. What's it look like? What's the plan look like? You know, how's the risk management on it? All that stuff. So look, see how I just jumped in? I already start going back down. And then who knows where it goes from here. So anyway, just to think, something to think about, traders. Don't beat yourself up too bad when you have a bad day. Go back to the drawing board. Use that fuel to study your craft. My biggest red days have helped me grow the most because I go back and I'm like, what did I do wrong? I never want to experience that again. What could I have done differently? You know, what happened there? Sorry about that. I had to take that call real quick. So yeah, so you know, just it's all about trading the plan and going back to, you know, what's the plan and having proper risk management. And a lot of times when you have a big red day, it helps you reflect on what that plan is. Is there a flaw in the plan? Where did I make a mistake there? You know, 'cause sometimes your biggest red days will show you the biggest flaws that you have, and then you'll fix those, and that'll allow you to grow exponentially faster and be better and better. So, yeah, I definitely you know, just reflect back on it. Don't revenge trade. Take advantage of the opportunity to learn from that mistake and see how you can refine your trading plan and your risk management plan, and just, you know, get better and better and better, and then you know, your account will grow that much faster. All right, so we hit the target right here. So if I knew I was going to hit that target, why not have I just traded this in this up my small account, recovered most of my day, if not more than, you know, my day and then some? Why not just do it? I mean, I was still holding in my other account until I got my target. So why wouldn't I have done it in this one? So, and because I would have got in around here, so I would have been looking at, you know, maybe a 5-point gain, 6-point gain. And then where's your stop? Well, the appropriate stop for me on this account based on when I entered this trade and all the technicals was closer to the $200 range. So basically I would be making 5 or 6 points, and if I was wrong and I put my stop in the right place, then I would be losing around 45 points or 40 points. So risk $40 per share to make $5 per share. It just doesn't make sense. But then you're like, well, why not just put your stop down here at the bottom of one of these flags? You know, just put it around here. And that's because my trade plan didn't call for that. So, you know, and if I don't put my stop in the right place based on the technical information that's available to me on the big picture and all these smaller time zones as well, as I talked about in that other video, sometimes you have to look at the bigger picture instead of these zoomed in micro time frames. You know, if I put my stop, you know, like that, then I do the same thing that I just did in my first trade today. And the reason why I'm down so much money on my first trade was because I put my stop where I didn't want to lose money rather than the right place. So for me, it's important to put my stops in the right place. I didn't do that earlier. I had to pay $84 for that mistake instead of making money on it. And if I did that again here, I'm just repeating those same mistakes over and over again, and that just doesn't make any sense. So yeah, you know, I know it's going to hit 253. That's why my line was here. But really, do you know? I mean, there's always that, you know, 90%. If you're 90% right, there's 10% chance you're not gonna be right today. So just like my you know, my other trade on Friday, you know, I was confident it was gonna be a winner until it wasn't. So, you know, you just never know. So anyway, so just something to think about when you're thinking about, oh, I'm just gonna jump in. Where does your stop go? What's your reward versus your risk, and is it really worth it? Or is it better just to wait for something else to set up or come back another day, right? Tomorrow, the market's open tomorrow. You can always come back tomorrow. So, you know, something to think about. All right, traders, so that's going to do it for me today. It's, you know, only got about 25 minutes left in the market, not even. So I trade out the 5-minute candles. That doesn't give a whole lot of room for movement, although sometimes I do have stuff that'll hit in the last 10 minutes and it would have been a winner, but it's just too high risk to get stuck in the last 5-minute candle. So as part of my trading plan, I do not trade going into the last 15 or 20 minutes of the market. Very rare occasions I might do it, but for the most part I don't, and I don't see anything setting up that would be worth that risk right now. So I'm going to shut it down, and yeah, we'll just come back tomorrow and slowly grow this account back if we don't keep making mistakes. All right, hope everybody else had a much better day than I had. All right, see you.